right, everyone. Hello, everyone. Looks like we're going to get started here. It's currently 10 a.m. Chicago time, so we're going to start right on time. Once again, my name is Marcus Zielbauer. I'm a broker here at Infinity Futures. Really appreciate you guys participating and jumping into today's event. We're going to be doing this webinar presentation with Gavin Holmes and Trade Guider. Before we get going here, guys, I want to go over something that is very important. First, I just want to make sure that I'm coming in clearly. So I already did a sound check, but had a bunch of people jumping in now. So if you guys can hear me, if my voice is coming in nice and clear, can you just give me some indication that you can definitely hear me? Okay, everyone's saying yes, 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 yes. Marcus, we can hear you. Thank you very much. I appreciate it. So before we get going here, guys, I want to go over something that's really important. It is a risk disclosure. I'm sure you guys are already acclimated with it. Excuse me. Trading futures, options, and futures in retail off-exchange foreign currency transactions involve substantial risk of loss and is not suitable for all investors. You should carefully consider whether trading is suitable for you in light of your circumstances, knowledge, and financial resources. You may lose all or more of your initial investment. Opinions, market data, and recommendations are not subject to change at any time. Past performance is not indicative of future results. Obviously, this is important because trading futures is risky. You should only invest with risk capital. My own personal definition of risk capital is money that if you did lose, it would not have any impact on your current daily life or your retirement horizon. Everyone here in the office has a direct point of contact, a representative. So if you are unsure about the amount to deposit, your own personal amount of risk capital, just call in. We appreciate questions from you guys. I'm sorry if you guys can hear a dog barking in the background. My boss was nice enough to let me bring in my puppy into the office. So she is a handful. I'm not sure if any of you guys are dog lovers, but I do apologize. Cool. So before we get going here, Gavin actually recently came to Chicago last week. He did a presentation at the Chicago Mercantile Exchange, and he asked me to do a little bit of a spiel beforehand where I populated our charting software. For those of you that don't know, we offer our charts. It's a white label version of Sierra charts. Extremely cost-effective charting, an incredible amount of capabilities, and I just want to show you a couple things that you can use in conjunction with the Trade Guider technology. So I'm going to populate it right here. So this is AT charts. Like I said, it's a white label version of Sierra charts. Anything that you have, if you are already acclimated with Sierra, it's compatible with AT charts. And since the topic is really revolved around volume, I wanted to show you 3 different features within the Sierra program that are volume based. I'm sure you guys have already heard this, either emails, presentations, or whatnot. The first indicator that we're getting a lot of feedback or requests is this. It's called volume by price study. And basically, it represents a volume histogram that you can visually see the buildup of price at various actual levels of pricing on the right or left-hand side. You can customize this to specify different time frames. For example, a lot of people want to see where the buildup of volume is from the equity open, which is 8:30 Central to 3 p.m. And you can do all overnight volume. You can see right here those, what is that, highlighted pink lines is the volume point of control. Basically, based on that profile period, it shows where the most volume has been accumulated through that period type. So that is a capability. It's called volume by price. I already got a question. What is the difference between charts? Charting's a preference for individuals. This is charting that you can access through Infinity. It's free if you do minimum of 10 round turns on a 30-day business cycle. If not, there's a $19.95 charting fee that gets applied to your trading account with us. But in terms of cost and overhead cost, monthly expenses, it's extremely minimal, especially for what you get with us. So we offer for free too, just with a little bit of trading per month. All right, so this is the volume by price study. I want to click on over. I'm sure you guys have heard of TPO, profile, time price opportunity. That's a tongue tire. TPO study is accessible through our charting software as well. It's not a higher tier of cost. So if you guys come from the Sierra background, you know that there's different tiers between level 3 and level 5. We offer their level 5 capabilities within a standard package of Infinity. We're not going to bill you on the side for access to this. It comes standard with any demo account. So if you guys, after this presentation, want to jump on, really check it out. We offer a 30-day trial of our software, absolutely free, including all this information. All it takes is your name, number, and email, which you probably already gave to us by registering for this webinar presentation. So, I often describe charting. It's a personal preference. It's like a different vehicle, and there's no point not to test drive this vehicle. You might like it better than the current vehicle that you're driving. Next thing I want to show is another volume-based indicator. This is volume number bars. Basically, it shows the difference between bid and offer, volume accumulation. It gets really down to the grit root of volume, where you can see the difference between bid and offers coming in the market. And I put on an indicator on the bottom of this that represents the actual number of bid and offers, and you can see the differential between the two. Obviously, in theory, if more bids are coming in the market than offers, and vice versa, it's going to pick a direction of the market. As you can see, the green bars, more bids and offers, the market tends to go up, whereas offers over bids, the market tends to go down, obviously. In theory, this is a great representation of just 3 of the functions that come standard with AT charts. And one other thing that it's included, relatively new in, I was speaking with Gavin about this earlier. You can set this up through Gavin's Smart Technology, where in today's technology, we recently found out that every cell phone, I'm not sure if you're aware of this or not, but every cell phone has an email text capability. All you have to do is go to Google and look up what my email text is, and it depends on your provider. Here, let me pull this up. I Googled this before even coming here. How to send a text message, SMS via email. So as you can see through all these, depends on who your provider is, but all you normally have to do is provide your actual mobile number, and then add, vmobile at pmsprint at vtext.com. And you can set this up through AT charts, where if it gives you any alerts, Gavin will go into his alert system here coming up. It actually provides a text message alert instead of you having to populate your email account, and maybe you're out of town, out of country, and don't want to pay for data. This is a really neat free service that you can set up through the charting software, and I will show you right now how to do that. So global settings, it's in general settings. You can see the alert tab, and I went ahead and put in an example where it says send email when this alert is triggered. Well, since my email is actually my mobile number, it sends this as a text. It's actually pretty cool, guys. If you can try this on your own, open up your Gmail account, go to Google, see what your text service is, and then send yourself an email text and see if it populates in your phone. Whitney asked personal preference. Whitney, we can get to that a little bit later in the presentation. This is really Gavin's time to shine. So 3 different indicators I showed you. The ability to send a text alert via email is really cool, but it's just an open invitation, guys, to check out our services. If you're not familiar with Infinity, I highly recommend you calling us up, shooting us off an email. We appreciate questions. That's why we're here, and everyone has a direct point of contact, or direct point of contact, or direct point of contact. Couldn't think here at Infinity. So give us a call whenever you guys want. Without further ado, Gavin's going to come here and switch the presentation to himself and go over his setup. So we got a live market feed going right now. Gavin, you there? All right, looks
sure
like he's taking over.
I'm here. I'm just going to put my screen up. I'm actually in a trade right now.
Oh, excellent.
I'm currently long, and I'm going to start right away without doing the PowerPoint that I was going to do. I'm going to go straight to me here and show how this trade is running, because I took it while you were on air there, Marcus, so forgive me for jumping in, everyone. I will introduce myself formally shortly. I'm currently triggered long into a yen trade, okay? I'm going to manage this trade through based on the sharpshooter strategy that I'm going to be explaining today. First of all, my stop was at break even. The first part of the strategy is we move it into profit, okay? Because we've seen some weakness appearing. I've entered on this signal here, a test, because of this indicator there. Both of them here, you can see the volume, which I'm going to be talking about today, is extremely high. So with that, you can see, if we look here, that several trades have triggered all at the same time using the strategy. Now here, if we concentrate on the 6J here, just bring that up. And you can see here, this is the Japanese yen using our scanners, and this was the other signal that confirmed my reason for taking the long trade, okay? A test in a rising market. Now, I'm using the Infinity AT platform and charting. So what you've got here is exactly the same type of trade, and we've just been filled. So you can see how quickly the fill happened there in a live market. Marcus, could you just confirm, because I know some people are skeptical out there, that I am trading, and I did trade a live account when I was at the CME and also here today. This is not a demo account that I'm trading on here.
Yeah. You have confirmation, live account. You can tell even by the different hue of the gray coating in the back of the depth of market screen, the dome, with your account number that's live. Way to go. Nice trade.
Thank you. Yeah, first one of the day. Now, let me just explain a few things about this trade, because usually I start off my presentations with a PowerPoint. Let me switch this fan off, because I'm sure that's annoying you in the background. I can't see your questions at the moment, so let me explain the logic. Because most people who come to these webinars afterwards say, Gavin, what I really got out of that webinar was you should explain the logic of volume. I'm going to teach you today a couple of setups, not a lot, just two things that I trade with. One to the short side, and this one actually happened live. I feel very blessed when this happens. You know, I'm doing a webinar just as we did at the CME. Day one, we had a 2-day live course that we did last week. And on day two, with the group, brilliant group of people, if you were there, great that you're back in this webinar today. We took 4 trades there. One of them was an Australian dollar trade, and it was almost very similar to what, it was a short trade, and it was a similar trade to what's setting up at the moment in some of these futures markets. So let me explain the logic of the trade to you. First of all, let me ask you all a question. What do you notice? This is the bottom of the screen here, and this is volume on the charts. What do you notice about the volume on these 2 bars here and again here? What do you notice about the volume? Just type it in. I can see the question panel now. What do you notice about the volume at the bottom here? Okay, now most of you are saying it's massive. Somebody said Yao Ming. That's an affectionate term of mine. It's what we call in Trade Guider, which is my company, we call it climactic volume. Okay, it's buying from professional money. And these 2 bars here, okay, as we're going to see all these things that are flashing here, they're all sending me alerts for trades right now. So I could be in 5 or 6 trades right now. As it happens, I never trade more than 2 contracts at a time. So on the account that we trade live, it's a very small account size. And we do that deliberately because a lot of people want to know that they can trade a small account and build it slowly. Not make millions in a couple of weeks. That's not going to happen. But if you've got a $5,000 to $10,000 account and you apply some strict rules, which I'm going to teach you today, then you can make it in the markets, as I'm going to show you. So let's talk you through the trade setups. In fact, this one here is a key one, and it's one that we spent a lot of time talking about in Chicago. It's my favorite setup, and it's called a test in a rising market. Okay, and why this signal is extremely powerful, followed by what we call no supply in the market on this bar. There's no selling pressure in the market at this point in time. So I traded one lot long. Immediately I saw this indicator appear, and I was filled just as it went above. In fact, I beg your pardon, I was filled on that indicator, and it was confirmed on these two bars here. Now, at the moment, you're going to see that as we've gone up, we've got some red indicators appearing. Doesn't mean they're wrong, and it doesn't mean you'd short them, because you wouldn't short against the trend. But what this software is looking at is supply and demand. Supply and demand. And we're looking for the imbalances of the supply and demand situation. So here I traded one lot, as you can see, on this contract. And the strategy that I'm going to show you today is known as sharpshooter. I was in the trade for approximately 11 minutes, not very long. Okay, and there'll be many others, I'm certain, today, because we are seeing quite a lot of volatility. So let's talk through the trade itself. First of all, what do you notice about the range or the spread on this 5-minute price bar? This one and this one. What do you notice about the spread compared to all these other, what we call spreads, which is basically the high and low of the bar? What do you notice about that range compared to the bars behind it? What's your observations? Just type it in. Just type in, what do you see? Yeah, that's exactly right, guys. Yeah, you're getting it. They're very wide. Both of these spreads, as the volume is increasing, we have wide spreads. And Wyckoff, who was a trader from the 1920s, who actually invented the actual system that I'm going to show you today, we managed to computerize it. We notice that there's two very wide spreads, and Wyckoff would call that hypodermic volume. Hypodermic volume. But what do you notice as we come to here and we have a black bar, which means it's closed level, with a strong green indicator in it? What do you notice about the spread on this bar compared to the two behind it? Have a look very closely. What do you notice about the spread of this bar compared to these three? Look very closely at it. It's very important. Yep, Piotr, exactly right. It's a smaller range, and we close in the middle. Now, at this point, I would not be thinking of taking a long trade. Okay, it looks wonderful in hindsight, but that would not be where I would consider a high probability setup. What we're looking for is a setup where the probabilities of the market going higher are in our favor. So we wait for the market to change behavior, which means in our proprietary system, which is called Trade Guider, which we've actually built into the Infinity AT platform, and also Sierra Charts as well, and some other platforms too. Here, the system turns green. These dots are a short-term trending system. This green box, or this green bar here, is a medium-term trending system. And below here, we have what we call a bullish, bearish volume thermometer. Now notice at this point, where the actual signal comes in, we can see that the bullish bearish volume is clearly bullish. The volume thermometer, clearly bullish. The medium-term trending system, bullish. And most importantly, we have strength in the market as determined here. Now you notice I came out my trade on this bar here. I moved the stop up because I know that this is going to act as resistance. And lo and behold, we start to see weakness appearing. And again, you can see here, what's happening? No demand, and the market's falling. It's very likely to fall back into this area and retest, which could mean another long opportunity. Now, there's so many different trade setups to show you here today that it's going to take me quite a while to go through them all. But I will take some more trades if I see them. But I do want to now move over to the part of the presentation for those of you that are new. Now, let me just ask the audience, please, if you can help me with this. How many of you here in the audience are new? This is your first Trade Guider presentation. How many of you are new? Could you just type in N for new, if you wouldn't mind? N for new. Just have a quick look here. Okay. There's a hell of a lot of people here, so. Okay, welcome to all of you. There's a lot of you. Hello, Brenda. Nice to see you. We've got quite a few people who were here with us at the CME event. So there's a lot of new people here. Okay, so let me go back to my original presentation. I had to, sometimes when you're trading live like this and you see a trade setup, you just have to take it. So what you're going to hear in the background, you're going to hear me trade alerts coming into my computer and onto my smartphone, just as Marcus showed us, based on the technology I'm just about to show you. So welcome to you all. So we've been 15 minutes and already there's one trade. That sometimes happens. So let me tell you a little bit about what we're going to talk about today. Last week on Wednesday and Thursday, we did a 2-day live trading event, which was hosted by Infinity Futures and our good friends at the CME Group headquarters. And we traded live. We had 4 trades there. We've recorded them. We've recorded the event on video. We are going to make that available over this weekend. It's a very good training course. It covers all the basics and the advanced setups that I'm going to show you today. So again, I just want to formally thank CME Group and Infinity for inviting us to do that event. It was that was me and my colleague Steve Phillips in the main auditorium of downtown Chicago CME Group. And we did theory day 1, showing you all the VSA, the key VSA setups. And when I say VSA, I'm talking about something called, what I'm going to teach you today in this presentation, volume spread analysis, VSA. So let me introduce myself formally now, as I didn't get a chance to do that before. My name is Gavin Holmes. I'm the author of the book Trading in the Shadow of the Smart Money and the Complete Volume Spread Analysis System Explained. And I'm head trader at Wyckoff Williams Investment Portfolio Hedge Fund based in London. I'm currently broadcasting to you live from America because I'm visiting my family. I'm in a place called Darien in Illinois, and will very shortly be in downtown Chicago in the Infinity offices to see Marcus's dog. Very much looking forward to that. But I didn't start my career as a financial officer or even an expert in finance. I actually started my career as a police officer. And as you can see here, that was a picture of me when I was 19 years old, just been recruited by the Hampshire Police Force, where I served, and unfortunately got injured on duty. And my whole life changed, and I retired from the police and completely changed direction. I was very fortunate 17 years ago to meet this man who passed away last year. I was with him when he passed away. His name is Tom Williams. He's my mentor, my master, as I call him, and he was a former syndicate trader in Beverly Hills in California. And there are many of those syndicates even today, but they're very secretive in their dealings. They don't want you to know they even exist. Some of them are called hedge funds. You've heard of that. Some of them go by different names. But today I'm going to teach you how to read the price chart to follow the footprints of the professional money, or what I call the smart money. I have done well over 1,000 presentations in 45 countries, both online like this and like we did in Chicago last week, live. I make a point of trading with real money with a live account, showing how to manage risk, which is incredibly important, and when a setup appears, to explain it to you, the audience, so it makes sense. We actually launched our smart technology. It's called Wyckoff VSA Smart, actually at the CME Group in 2016 in October. And I was delighted there to be, again, trading a live account, which we did. Great trade setups appeared, but we've now got more advanced with our system. And we've developed a scalping strategy, which works in all markets, but I'm going to show you today in the futures market, called Sharpshooter. And I'm going to give you all, for coming here today, a copy of my book, which is a PDF, a video training course, which will get you up and running if you don't know much about volume. And you can, if you wish, come into our live trading room. Before I start, however, I want to just challenge everybody, because when I was in the Chicago event, we asked the question, what qualities makes a really good trader or investor? And I have met thousands of people live and also online So I think I'm fairly qualified to look at what really does make somebody a successful, profitable trader. And these are just some of the things that I have seen with people that makes a big difference. First of all, you've got to be patient. Now, at the moment, I've got 6 or 7 trade alerts that are fired off on my screen here, but I'm still going to be patient. Patience pays, okay? You're paid to be patient with the market. Timing. I'm going to show you today how, with this strategy, you can time your entries much better by using multiple time frame analysis. You've got to be confident in yourself. You see, as you're going to learn today, one of the things I'm certainly not worried about is taking live trades in front of an audience, because I'm confident. I'm confident in my system. I'm confident in what I've been taught. And I know the platform I'm using, Infinity AT, has proved reliable. It's quick, as you just saw. It's fast, and it's a professional trading platform. So even if you're a retail trader, you can access that professional platform. You've got to be able to study. I'm going to show you in that 2-day course that we're going to release this weekend, how if you study for just an hour a day for a couple of weeks, you can master the Wyckoff method. It doesn't take very long, but you do have to put a little bit of work in. Self-discipline. That was one of my faults at the beginning when Tom was teaching me to trade. I was too anxious to be in the market. I was always pulling the trigger. And then I realized I've got to stop. I've got to have a written trading plan. And I did write a written trading plan, and it made the whole difference to my success as a trader. Then I mastered the VSA method and wrote a book on it, as you know, Trading in the Shadow of the Smart Money. Some of the people said, well, do what VSA experts do. What we read is the volume footprint, as you're going to see on the charts. Have a desire. You want to win. You want to be a winner. Feel like a winner, and you'll be a winner. You've got to focus. You can't be you can't be trying to trade and then watching, your kids out in the garden and doing all that thing. You've got to focus in on the trade. I'm going to show you today how this system makes it much easier for you to focus. Understand the trading game. Be open-minded. I only ask of you one thing. When I'm doing these presentations, even though I can't see you, I always imagine that you're the jury in the Old Bailey, which is a court in London, where I've also given evidence. And I've come up and I'm Detective Holmes and I'm giving you evidence. Sherlock Holmes, yeah, it's the same surname. And you are the jury. So all I ask of you today is use your mind like a parachute. A parachute is best used when it is open. Belief. You have to believe in yourself. I mean, there's many educators out there that will teach you different strategies. This part is the most important thing. If you're going to make it in the market, you have to believe in the strategy you're going to adopt. Hopefully today, I'm going to show you and convince you that the strategy that I just used to trade that yen is just one part of a strategy that works. And I'm going to show you it both in live charts, and I'm going to show you some of the trades that we've taken in our trading room. And most importantly, I'm going to give you the strategy document for free. There's no charge. You can go and download it right now. In fact, I'll do that shortly. So you can actually see the trading document, the plan that triggered that trade on the yen to the long side. Education. Congratulations to Infinity and the CME, who put a lot of time and effort into making sure that their customers are educated. Have a trading plan that works. Let me ask you all a question. Please do participate in this. How many of you here, yes or no, have a written trading plan? Just yes or no. Please be honest with me. I just want to have a look. How many of you have a written trading? And I know all the people who came to the CME event have got a written trading plan because, yeah, okay, there's a lot of you saying no. Guys and girls, I can't stress enough. If you need help with a written trading plan, we can help you. In fact, I'll give you the framework for it today. But it's very, very important. It's probably the thing that made the biggest difference to my trading. Okay, good risk management, that comes from a written trading plan. Not just, it's very easy to go and trade the financial markets. In fact, a monkey can do it. You can press a button and be in the markets pretty quickly. But as we all know, right, trading isn't easy. If it was easy, everyone would be making money. So we've got to try to have something called risk management, which knows when you've pushed the button, what your stop is going to be and why it's there. The strategy that I just showed for the yen trade started with a 7-tick stop, which was moved to break even within 8 minutes of the trade. The whole strategy is based around risk management. and good risk management. You've got to be concentrated. You have to concentrate and focus. Independent in your thought, okay? In Tom Williams's book, The Undeclared Secrets That Drive the Stock Market, he refers to the group of traders that lose money as the herd. And what he means is, by that, is there is a lot of traders out there in the group that don't understand what moves price on a chart. It is not a mathematical formula called a MACD or a moving average or a stochastic that is moving the price. It's the trading of the professional side of the market. I'm going to teach you today, you must be contrarian in your views. Believe your charts. Your charts do not lie. You must learn to cope with fear. Believe me, as a police officer, I've been in some very dangerous situations. So trading for me in front of large audiences, which I've been doing for 16 years, causes me no fear at all. I will admit, though, the first time I traded in front of a large audience with a live account, I was actually at the New York Traders Expo. And guess what happened? I was a bit fearful when I got up there. But that signal I just showed you, the test in a rising market, was the same indicator that I traded at the New York Traders Expo with exactly almost the same setup, which I'm going to explain to you in detail in a minute. Follow the system that you are comfortable with. If you're using candlesticks or you're using a MACD or a moving average, then what I'm going to teach you today is added confirmation on top of what you've already learned. So you won't have wasted the knowledge you already have. And if you're wrong, close your position or get stopped out. Don't ever add to a losing trade because you think you're right. It's not going to work. So let's introduce you to some basic concepts before we get to some live charts. The masters of this technology is on the right, Richard D. Wyckoff. Okay, so let me ask you a question. How many of you in this room have heard of the trader Richard D. Wyckoff? To the right here. How many of you have heard of Richard D. Wyckoff? Yes or no? That's a hell of a lot of you. Okay. And of course, on the left, my master, the late Tom Williams. I dedicate this webinar to him because he taught me pretty much everything I know about trading and investing, and he changed my life. The whole meeting with Tom right at the beginning, 17 years ago, was a complete life-changing moment for me and something I will never regret. Richard Wyckoff was born in 1873, passed in 1934. He was a market authority, and he was a founder and online, one-time editor of the Magazine of Wall Street, and editor of Stock Market Technique. And they said at that time, even without the internet, he had over 250,000 subscribers. Wyckoff tells us thousands of those who operate in the markets now recognize the fact that the market momentarily indicates its own immediate future, and that these indications are accurately recorded in the market transaction second by second. And therefore, those who can interpret what transactions take place second by second or moment by moment have a distinct advantage over the general trading public. What is VSA? It's volume spread analysis. It does not use mathematical formulas at all. It simply looks at the movement of price and the volume. So VSA measures the forces that drive the markets. And there are universal forces all around you right now. I can guarantee that, you know, if you think about while you're sitting there in your chair or you're standing up, you're under the force of gravity. But I bet if I asked you to explain that, you'd struggle with it. But there are forces driving price all the time the markets are moving. Wyckoff said, successful tape reading is a study of force. It requires ability to judge which side has the greatest pulling power, and one must have the courage to go with that side. This is exactly what we're going to teach you, how to read the force of price and then execute a trade with courage, knowing why you're taking the position. Tom George Williams was born 1929. He passed in 2016 on November the 7th. He said, if you can read a chart correctly, you will understand the markets do not move randomly, but are moved by the smart money. And you can see their intention at support and resistance levels by looking for the telltale footprints hidden in volume and price. You have a chance to profit by following in their footsteps. Volume is vital in your analysis, which is why the self-regulated exchanges around the world will not release true volume figures until the day after the trading took place. I don't know if you know that. So who's the smart money then? Well, I've written a book, Trading in the Shadow of the Smart Money. But I'm often asked, as I was when we were at the CME, who are they? Gavin, who's the smart money? Who are you talking about? Do you know them? Yeah. Well, we all know them. Actually, the smart money are the institutional money, the big funds. If I said, well, I'll show you in a second. I've got a slide to show you. So the smart money can trade large enough size to actually affect the price movement of the instrument being traded. And they can change the direction and trend of price. They cannot, however, under no circumstances, hide their footprints on a chart when you understand what I'm going to teach you today. Volume spread analysis. So the smart money, do a little competition here. Who's that at the top left? Who can tell me? Who's at the top left? Anyone know who that is? So you can be the first to win the prize here. Who's that at the top left? Yep, well done, Brenda. That's an easy one for you. Of course, that one, yeah, you got Buffett, George Soros. That was Bernanke, who of course is now Janet Yellen. Of course, the fictional character here, Michael Douglas. And then we've got down here, bet nobody knows who that is. Yeah, that one there, of course, is Gecko. And this is actually Greg Kofi of More Capital, who made $600 million in the markets a few years ago. He's from Australia, and he's a human being, okay? He's not a machine, not a robot, okay? So I can assure you there's money that can be made in the markets if you're disciplined and you understand how to read a chart, which is what I'm going to teach you today. So let's talk about what is volume spread analysis. Well, first and foremost, volume can be seen at the bottom of your charts. In fact, here you're going to see in, let's go back to the yen here. We'll go to the 5-minute chart. Oh, we've got another signal just come in. Look, we've got another test. So it could be, do you remember I said at the beginning here that we might come down into this area and retest? That's going to trigger a setup if we get another test in this area. So I'm going to watch this very closely. But you can see on this yen, we can see at the bottom of the screen here, volume. Very high volume, climactic volume, which Wyckoff called hypodermic volume. And it's on a down bar. And we define a down bar as a price bar that has closed lower than the closing price of the previous bar. And there are two rules we must always remember. Rule number one, when strength appears in the market or buying opportunities, it happens on the falling price, because professionals do not want to buy high, they want to buy on depressed prices. Why wouldn't you? If you go to an auctioneer and you're going to an auction house, you don't want to buy something that keeps going up. You want to buy it at the lowest possible price. That is why rule number one, strength appears on down bars. As we can see here, another down bar, another down bar, yet another down bar here. Okay, so that's the first rule. Rule number two, conversely, is when weakness appears. That means opportunities to short the market. They will happen, as you can see here, on up bars. You can see over here, up bars. Over here, up bars. And very often in VSA, you'll see these treble tops are designated with a signal called 26, which is red, and it says sign of weakness. Sign of weakness. Green indicators, sign of strength. That doesn't mean save our soul. It's a sign of strength. It means the market has become strong at this point. It's changed behavior. There was the entry that we saw right at the beginning of the seminar. So these are the type of things that we look for. So volume spread analysis. We're looking at the range of the bar. Let's imagine this is a 10-minute chart, for instance. The volume we can see is very high. The spread or the range of the bar is high there and the bottom there. That's what we call the spread. Do not confuse that with the bid-ask spread. It's simply the high and the low of the bar. And finally, we look at the closing price. We do not look at the open because nothing's happened on the open. We're not interested. We're looking at the force of price. So how can volume spread analysis identify the moves of the big smart money? Well, the golden rule that was drilled into me by Tom is volume is activity. Volume is activity. And we are interested in volume because it tells us the consensus of opinion amongst the smart money. And then if we observe the price spread and closing price in relation to the background of the charts, we get confirmation. Now, for those of you who are in this presentation, you think, I really want to find out more about this, wait till the weekend when we release the video of the 2-day Chicago event. It's the best event we have ever done with, actually, I have to say, one of the best groups of people we've ever been with. And really, really good questions came in. One of the things, I got an email from several of the participants afterwards, and they said one of the things they really, really got from the event was the ability to interact during the breaks and then ask the questions live as we were filming. So there's a lot of information there. So why do the markets work? Well, they have to. They work very efficiently. But the market works because human beings have two powerful emotions they have difficulty controlling: fear and greed. Tom Williams said, the market has to be fed losers. It's devious. And what you hear will often not be the truth. I've never heard the truth about the stock market or any market on television. Just look at the news about the oil market in 2008. Greed at the top as many traders piled in because they were told oil had to go. Do you remember that? To $200 a barrel. It dropped to $32 a barrel. So it wasn't at all bullish. The chart never lies. And I, Gavin, went onto YouTube to show a signal that I'm going to talk about later. The end of a rising market. Oil fell to $33 a barrel. Then look at the banking sector in 2008 during September. Fear set in and professional money began to buy, not sell. And that caused stocks like Goldman Sachs actually to rally nearly 800%. This is an old slide. I need to change that. Look at the market we're in right now, ladies and gentlemen. It was all in the charts, says Tom, if you know how to analyze supply and demand, which is what I'm going to teach today as we go forward. So volume. The gasoline that drives the financial markets, the key to the truth. Two very important points I want to drill into you before we get to the live charts. Volume is activity. As an estimate, about 85 to 90% of the volume seen on the charts will be from the large funds. You've heard of George Soros, the Quantum Fund. Institutional banks, we've just talked about, Goldman Sachs, JP Morgan. There's many of these, UBS, all of these institutional money are trading thousands of contracts every day. And then you've got professional trading syndicates or pools, which are completely nameless. They don't want you to know they exist. However, Tom Williams, the man that taught me, revealed that he was in a trading syndicate and he was their chartist. And he wrote a book which inspired me and thousands of other people to look at charts in a completely different way, which is what we're going to do today. When we see ultra high volume, followed by very low volume, in the right place, in context with the background of the chart, as we're going to see, they're actually footprints or signals from the smart money telling us that something's going on. And we, as traders, we must pay attention to those footprints. The footprints of the smart money are what we are following at Trade Guider, which is why the book is called Trading in the Shadow of the Smart Money. So the three universal laws that govern all market behavior, and these can be observed on the price chart. Number one, the law of supply and demand. We've all heard of it. The law of cause and effect. The law of effort versus result. All of those three laws are available on a chart. The fourth law, which will govern if you're going to be successful in life, is an understanding of something called the law of attraction, which is your belief system that you as a human being are going to create wealth, you're going to have health, you're going to be successful in the markets, and you believe it. Because your mind is extremely powerful. They say that we only use 5% of our brain power. I've just been reading an article on Einstein and how he he realized there was parts of his mind that he could tap into. Well, he realized that actually, if you believe in your success, you create your success. And I'm writing a third book on that very same subject. And we did discuss this in the two-day event in Chicago. It's very important. So why is ultra high volume very, very, very important on a price chart? Now, it's interesting. I'm just about to reset now all the instruments for scanning. I'm just going to show you this very quickly on my other screen here. Okay, can you just tell me when you can see my screen, please? And you should now be able to see the sharpshooter at work. Let's just bring it up here. Can you all see that? I can't see if anyone's typing. You should be able to see that I've just reset this. And now you can see it's triggered some setups. So what I'm going to do, I'm going to left click in the boxes here, and it's now going to go and sniff the trades for me. And it's going to trigger those trades when the VSA principle could be a test in a rising market, could be another one, could be an up thrust. All of these names that I'm giving you are what we call trade setups. So I've now triggered that Okay, so now is now set. So any VSA signal that appears will give me an alert on my smartphone from this platform via text and also via email to tell me that there is a setup. Now, how does that look on the screen? This is what it looks like. This is my account. This is the email account that I use. And you can see here, it tells you what the instrument is. Okay, it tells you what the potential trade is. Is it a short trade? Is it a long trade? And it also gives suggested, we're not telling you that you've got to take a trade here. It's just saying volume spread analysis, our computerized system has come up with a trade setup, just as we saw there in the Japanese yen right at the beginning. So ultra high volume, why is it very, very important? It's very, very, very important when you see it. And I'm going to show you what it looks like. Because ultra high volume will often mark a top or a bottom on a price chart. And it'll give you an early warning, if you understand and can read it, which is what I'm teaching, that a trade is setting up against what we call the herd or the group. If a trade is setting up against the group, then you, if you can read volume, can participate in the trade setup. What causes price to move on a chart? Well, the past price, which a lot of traders, retail traders are using, does not cause the future price to move. The price movement is caused. It's caused by the activity, either the buying or selling of the smart money. And this cannot be seen by just analysing the past price, which is what so many retail traders do. It's vital to look at more than one time frame as well, as I'm going to show you on any chart, and to look very closely at volume, as we're now going to see. Is there any questions so far before I move on? Any questions so far before I move on? Just don't want to lose anybody. Any questions? Is it clear so far? I just want to make sure I haven't. Yeah, Don says, when a market is range bound, okay, is it possible to trade using this strategy? Yes, it is. But Don, what you need to do is go to much smaller timeframes. So if I've got a customer that who trades range bound markets, and he's trading a 1 minute, 2 minute, 3 minute, 4 minute, and 5 minute chart, that's all he's monitoring. He's not interested in the big trend. And if it's bouncing around, now we just had an alert on gold. Okay, just so you know, it's a potential long in gold. It's just triggered right now. And again, the yen's come up as well. Let's go and have a quick look at that. It's interesting that the yen today is really making some moves. So we've got 4 or 5 alerts coming in, which is great because I can actually show you these as they appear. And actually, the yen at the moment is testing again. Not ready yet, but it's warning me that it's setting up for another trade setup. So I'll keep an eye on that for you. So let's go and look at volume. Trading in the Shadow of the Smart Money is the title of my book, and you can all get that book and the video right now if you go to the front page of tradeguider.com, which I'll do right now, and we've put a link on there for you to download the book and the video. It's just gone up today, I believe. Oh no, it's been there. Okay, let's get rid of that. So if you go here, all you need to do is go to tradeguider.com, which is our website, fill out this little email box there, which means you'll also be invited to a live trading session with me this week. It's completely free of charge. You can all come, but you must fill that out so I can see that you're going into our database. And then let's just put that in there. That will send you a copy of the video, okay, and the book. It's the full book. It's not part of the book. It's the full book. And there's the link to it. And it's with my compliments. The book usually retails on Amazon for $50, but you can have that with my pleasure. Okay, so I'm just looking at this setup as well. The euro, that's an interesting one. That is also triggering. So there's a hell of a lot going on today, which is good. So let's get through this quickly. So the trading method that the smart money don't want you to know about, which is true. This is an article that I've taken from Business Insider. I actually get this magazine and this online magazine. It's brilliant. And it says, presenting the secret trading strategy from the 1930s that hedge funders don't want you to know about. But this is exactly what I'm teaching you. It says here, okay, in his 1931 book, The Richard D. Wyckoff Method of Trading and Investing in Stocks, a course of instruction in stock market science and technique. It's out of print, somewhat difficult to find these days, or not impossible. I have a copy. But even in 2013, when this was written, hedge fund managers still swear by it. one of the takeaways, the key takeaways from the book, is that if you want to succeed, you have to learn to recognize the professionals and understand what they're doing. That's what those who follow Wyckoff do. They watch the large operators. Wyckoff walks us through the process of how a large operator will manipulate a stock up or down so that next time one sees it unfolding on the screen before his or her own eyes, he or she can react accordingly. Let me answer all the question before I move on. How many of you here, just type in yes or no, believe that the financial markets are being manipulated? How many of you here believe the financial markets, yes or no, are being manipulated? Okay, quite a couple of people saying, don't be silly, yes, of course, yes, everyone's saying yes. Okay, I'm going to show you. Okay, definitely yes, no doubt about it. Okay, why is that relevant to what I'm about to show you? It's incredibly relevant. Okay, let's look at some of the evidence before we move on of the mainstream media, which they've had no choice now, reporting this manipulation of price. Libor, very, very famous story here of how Barclays and other banks manipulated the interest rate price, which was in fact the Forex market. Okay, so that went on. Interestingly enough, they never admit responsibility, but they get fined for it, and they, you know, it carries on going. Look at this one. 470 million fine for electricity market manipulation. And this was the big one, gold. The price of gold has been manipulated. This is more scandalous than Libor, says Thomas Pascoe. It's been, you know, widely reported that the gold and silver markets are being consistently shorted by the big banks. Now, I'm going to show you today how the group or the herd make the wrong decision by investing in gold at the wrong time. I'm going to show you exactly on a chart where you should be looking to buy gold and where you should look to sell gold. There's something we call trigger numbers that trigger a trade. Is market manipulation good or bad for traders and investors? Always get asked this question. It's great news, because for those who can analyze a price chart correctly, you can see when the manipulation is happening. I'm going to show you this. It's very, very clear. So when you see bad news appearing on a chart, you will see everybody in fear. This is the sort of pictures you're going to see on the media, right? Price is crashing. Everybody is fearful. You switch on CNN or BBC or one of the main news channels, and they look out at you. They say, "Oh, it's terrible today. Everyone's selling." And many times the market continues to fall for a few days, but they never tell you when to buy. Brilliant. Thank you, Olga. It's a good book about market manipulation. Financial stupid people are everywhere. Don't be one of them, by Jason Kelly. Olga, I haven't heard of that book, but I shall get a copy of it. So I'm going to give you some examples, just two quick examples here of when the news is bad, it's a great opportunity to buy. If you can get over your fear and panic and you can read the chart. Now, you may well remember back in 2010, we had an oil spill in the Gulf of Mexico. And in fact, it was British Petroleum, a British company, who spilled the oil into the Gulf of Mexico. And the headline was BP shares plunged in price, okay, which they did. So when you see a price chart and you can see the volume, I'm going to be saying to you here, this could be an opportunity, and was an opportunity, to buy into the market. And to buy, not sell, to buy. So on this day, when this news story came out, I was in Boston, at MIT in Boston, and it was the Massachusetts Institute of Technology. And I showed them a price chart with a green indicator on it. And this is what it looked like. There were three, this is the, you can see here the weekly chart of BP, and this was the indicator. In fact, there was another one just further on. And this is what we call accumulation. Accumulation, buying by professional money. Yeah, buying by professional money. And you can see it's got three green indicators on it. And then what happened? The stock doubled in value. Now that's a fact. You can go and check that. This was the day when they said, or the week, they said, we cannot cap the well, if you remember that. And lo and behold, the stock goes up, not down. What do you all notice about the volume on these two bars, as you're about to see on the live charts? Absolutely enormous. Just like in that Japanese yen that we took earlier. Exactly the same thing. All right. So when we see that type of activity coming in, we know that there must be what we call professional accumulation coming in on the price charts, and that's what I'm going to teach you to identify today. Now, when good news happens and everyone's buying and everyone's bullish, that's probably the time to sell. Now, when we see that, it has to be on the price chart. You have to see it on the chart. I'm often being emailed saying, Gavin, have we seen the top of the S&P yet? Have we seen the top on the NASDAQ? No, we haven't yet. It still goes up. But we do know that professional money buy into down bars as the market falls. They have to. They can't make a profit buying too high. It's not good for business. So you may well remember the news about gold back in 2011. Many people were suggesting that gold could go to $5,000 a trounce. $5,000. All right. But what actually happened to gold? I knew when I saw my charts that gold was now very dangerous because I saw some unusual volume coming in. And actually, I went to an airport in Germany and I knew this had to be a top, because next to the Coke machine, the vending machine, was a vending machine selling mini gold bars, and people were buying it like it was out of fashion. That is a top. I'm going to show you on a chart now what that looks like. You're going to see this is the weekly chart of gold. It was actually the week where Goldman Sachs came out and said gold could be at 2,500 within a year. Look at the volume associated with this chart. All right. It's absolutely enormous. And on that particular volume, we closed near the middle of the bar. So all the buyers were coming in and the sellers were actually taking advantage here. And it actually has one of our strongest indicators on the top of this. It says possible hidden selling. And basically, if you look there, it says if the next bar is down and then it says closing near the lows, it confirms it. That was then confusing everybody apart from myself and Tom, who said, and we went on YouTube, it's still there, it's had 30,000 views now. We warned of this impending move, and we're going to show you exactly, I'll show you now exactly what the setup looked like. So we had a second signal. It says weakness has appeared based on the price action. Look at the volume on this bar, on the previous bar. If that was buying volume from the public and from the professional money, the next week we could not slam down like this. Simply impossible. Here on those two bars, everybody, supply has overcome demand. Supply has overcome any demand, despite the news telling us that everything's bullish. We have a signal again here on the daily chart. Those were the weekly charts. A signal called the end of a rising market. What do you notice here, everyone, about the volume? Just type in, what do you notice about the volume on this bar? What do you notice about the volume on the bar? Absolutely enormous. Just type in, what do you notice? Absolutely enormous. Yeah, absolutely enormous. Now, what do you notice here? What do you notice about the range of the bar, which is the high and the low of the price bar? What do you notice about the high and the low of this bar that I'm pointing at? I'm going to highlight it because this is extremely important what I'm about to show you. So what do you notice now about the range on that bar? Just type it in. What do you notice about the range on that bar right there? I'll just repointed it. Just type in. I just want to make sure you can see this. So we've all agreed we've got massive volume, right? Tiny, says Tom. Yeah, it's a tiny range. Now there's no trading range to the left-hand side here. This actually marked the top. And what we saw and how this signal works, we've got quite a few setups coming in here. How this indicator works is on the massive volume, for every buy order that's coming in from the public who say, guess what? I'm going to go long here. This is what we call distribution by the smart money. It's an opportunity to look for a short trade. And we can see over here, the market goes up but look at the volume now. It's non-existent. There's hardly any volume. We call that no demand. So here, professionals have unloaded their holdings to the public, who've been told gold's going to 5,000, 2,500. Professional money withdraw their interest in higher prices. And what happens? Here's the perfect headline. Okay. Metals 9.4% drop on COMEX is the largest in 30 years. So after all the bullish stories that was coming out about gold being bullish, actually, this is what happened. It's called distribution by smart money. Professional money, this is what a distribution phase looked like. This here is the mushrooming over which forms the top of a market in any time frame, as I'll show you shortly on the live charts. And you can see here what happens after we have the end of a rising market. The market collapses. And here where the price support was, we have a very widespread down bar, which locks anyone that's bought gold is now in absolute terror. They don't know what to do. They're in panic. They're in free fall. They're asking themselves the question, what the hell just happened here? And we have indicators all the way down here at A, B, C, and D telling us there's short opportunities in this market. Hopefully, I'll be able to show you these live today where we can see some trade setups. So that particular widespread down bar is known in my book. I've written about it. It's called the gotcha bar. And it's done deliberately to lock the public into very poor trades or the uninformed traders. I love this picture, actually. It's beautiful, isn't it? But they said on TV that gold was going to $5,000 in 3 years. Unfortunately, this is the way the markets have to operate. It has to have losers. So here, as you can see on the weekly chart, or the daily chart rather, over 2 days, gold, this is the biggest fall in gold in 30 years. And we now know that gold traded all the way down to around 1180. So is there more opportunities in gold? Massive, massive over the next few weeks. I think August is going to be some of the best trading we've ever seen. Because most people say, oh, everyone's going on holiday in August, but I'm not seeing that. I'm seeing a lot of volume in the market. Maybe the professional money who never go to sleep on the job are quite keen to continue to make money if there's opportunities and volatility. So let's now go to the live charts. And I want to start off by talking about the actual sharpshooter strategy and what I'm going to show you here today. So I'm going to do this on live charts now. And first of all, before I go through the strategy, we're going to go and have a quick look at what it's saying right now about the market. Okay, so currently, if we look here, you can see here the Aussie dollar, that triggered about half an hour ago now. I'm just going to restore that. Okay, and we'll go and have a look at the Aussie dollar, and we can quite clearly see 15-minute chart of the Aussie. We're in an uptrend. Okay, we can see that the market's trending up, everything's green. Down here, we have stopping volume. See, the volume is pretty high. The next bar is up. And if we move down some time frames to the 5-minute chart, even the 3-minute chart, you're going to see the entry here that was alerted to by the system. Okay, and what we're going to see is a climactic bar, massive volume. Okay, it's on a down bar, which is a price bar that's closed lower than the previous bar. And now any test that appears with this in the background would be a potential long trade. Now you can see also here the British pound. I'm going to trigger. I'm going to restore all instruments from scanning from scratch. And what's going to happen here now is it's going to start flashing. And you will hear in the background, once this actual comes up, you'll hear the following.
Trend alignment to the upside has arrived.
So what we're looking for is the alerts. They're going to send, as soon as a trade is triggered, the Infinity platform will send a text and an email to the GMX email saying that within the trend, remember each of these time frames that I'm monitoring, each box represents a time. So here you can see that the system, sharpshooter, is using a 30-minute, 15, 9, 7, 5, and 3-minute time frame. Most often, we tend to find, right, now we can see a lot of things happening right now. So let's have a look.
Trend alignment to the upside has arrived.
Okay, so we can see there, we've also got
trend alignment to the downside has arrived.
Trend alignment. What does trend alignment mean? Very simple. In the time frames being monitored, if all of these are green, right, it means we're in an uptrend. If I left click, let me ask all of you, okay, in the room here, looking at this scanner, would you be looking for long trades or short trades or no trades? What would you be looking
Trend
for?
alignment to the upside has arrived.
What do you think? Long trades, short trades, or no trades? What do you think? Let's just get a consensus of opinion from the group. Robert says, how do you know there's an alert on the phone? If you switch the volume up, it makes a sound, an audible sound, and sends you a phone. Just like you do when you get a text message. I use the sound of a shotgun on my phone because it goes boom, and you know there's a trade set up. But to answer your question, everyone's right. In fact, here you can see this box actually did trigger an alert. Okay. Now, if you look in the background here, you can see it says a 2-bar reversal on the 7-minute chart, and you're going to see over here we had stopping volume here, climactic action, a test, and all along here you're going to notice that the green indicators appear when the market goes down. That's what we're looking for. So the red indicators would appear as the market goes up. So now we're going to look to see if any of these are going to trigger. So what I do is I left click in each box, and the system now is automatically scanning for trades, automatically. So I don't have to, I'm monitoring at the moment every single one of these futures contracts. You can actually monitor up to 35, in fact, all of the CME futures contracts can be monitored using this system. We set the timeframes. These are the timeframes that we know work. Now, there are a set of rules that go with this particular strategy. So it's a rule-based strategy. And basically what we're looking for is, first of all, we must have trend alignment, which we have in several of these instruments. And then once we trigger a trade, you can see that ES today has had 4 red boxes in a row. So that's telling me it's in a downtrend. The NASDAQ is telling me it's in a downtrend as well. Interestingly, the YM is in what we call congestion. That means don't trade it at all. So you can see here, what we've got here is congestion. It means don't trade. There's no trade there. So this particular system will tell us when not to trade. Let me now run through the rules with you. And then we'll go, I've got about another 20 minutes here. So I'll go through these rules with you, and then I'll show you the place you can go and download this document. Okay. Can you just tell me when you can see my screen? You should be able to see a screen with the word sharpshooter Wyckoff volume spread analysis. If you could just let me know when you can see the screen, that would be very helpful. Yeah, good. We can see it. Thank you. Okay, let me take you through the document briefly. I'm still monitoring on the other screen here the charts. Okay, so I'm now actively looking for trades, and I will tell you as soon as one actually triggers. So, introduction. Let's go right the way to the top here. And read what this is all about. Okay. I wish this wouldn't do that. 1 sec. Just got to move this up. And then we can read it. Sorry about that. I'm going to use the scroll bar here. It's going to be much easier, I think. Okay, the background. When I first met Tom Williams in the year 2000 and began to take an interest in the financial markets, Tom made a statement I'll never forget. He said, Gav, the fact that you know absolutely nothing about trading and investing and have no preconceived ideas will make you an excellent student for me to teach, and one day you'll be a great success in this business. Looking back, it's been a great journey. It continues to be so. But before Tom passed away in 2016, he had one wish. He said the biggest danger to a human being when trading and investing in the markets is actually themselves. We need to create an automated trading system that takes much of the analysis away from the human being and let the computer do the work. A computer does not have flaws in its logic. Tom was describing to me what was on his mind: an automated volume spread analysis trading system that found trade setups based on the key principles of Wyckoff and computerized by Tom. At the end of this document, by the way, there's a lot more detail on the Wyckoff method and VSA. So I'm not going to read all that today because I just want to go through the main rules and then I'm going to apply them to the charts. So the trading system will intuitively trade alongside and in harmony with the smart money players who move and manipulated all markets. It was during 2016 that our head of technology, Gregory Margolin, showed me the latest development of a product to be used in our fund called Smart Center Pro. Okay, just got a setup, and it's on gold, and it's a potential long trade. So just so you know, we just had a setup come in, gold, 5-minute chart, and it's a potential long setup. So it's a test. Let me just see if I can take a trade here. Let me just bear with me. I'm going to have to be quick here because it's moving quite quickly. Okay, just bear with me here. Okay, I'm going to be able to explain this setup to you as well. So this will be a good example for you. Okay, let me just add that in. All right, okay, good. All right, fine. I'll come back and explain that shortly. So the concept was simple. Find trade setups based on Wyckoff volume spread analysis that are in harmony with the trend of multiple timeframes using the proprietary tools in the Trade Guider software toolset. At the launch of Smart Center Pro, which is now just called Smart Technology, which was live at CME Group headquarters in downtown Chicago in October 2016, we were able to demonstrate, as I've done today, some live trading with the system using timeframes starting with weekly charts, then moving down to daily, 4-hour, hourly, 15, 5 and 1 minute. Now, this strategy that I'm about to show you and teach you does not use those big timeframes at all. The biggest time frame we use is a 30-minute chart. So a 30-minute time frame. Okay, so let me just add this in here. Let's just get that right. Let's leave that through. So we've also got an alert, just so you know, on the Canadian dollar that's just come in as well, the CAD. Okay, so we'll keep an eye on that as well. So this was by far the most successful launch of any Trade Guider product, software product in the 16 years since we started in business. I can't believe it's been 16 years. The new strategy, scalping strategy, developed by our team was based on feedback from customers. They traded in smaller time frames, okay? And like me, observed that accumulation and distribution was to begin in the smaller time frames first and would then be obvious in the bigger time frames. Makes sense. Waiting for the big time frames to align with the smaller time frames often meant a large part of the move in the market was underway before the trend alignment system triggered a trade. Whilst this could be changed in the Smart Center Pro hedge fund software to use smaller timeframes, we realized that a specific strategy tested for specific markets with written rules and less requirement to learn all the VSA principles or the VSA signals may prove to be a winner. I need to put the R in there. And so the strategy was developed. And this is what the strategy is. It's called scan, confirm, and trade. Okay, scan, confirm, and trade. Simple as that. That's what we're going to do, and that's what we're doing right now. John says, what does a test mean in terms of when to buy? A successful test is exactly what we saw on that Japanese yen at the beginning. If you weren't here, John, I'll review it very shortly. We'll go back and I'll show you. Okay, so at this moment in time, we're testing the gold price at about 12. Let's just have a look where it is. About 12.77. So I'd be looking to take a long. Well, actually, if this next bar closes higher, I'm going to be able to explain to you, John, what a successful test is in the live market. Because gold had a failed test, okay, only about 20 minutes ago, and now they're retesting the same area. So actually, let's have a quick look at the chart that I'm talking about, so you know what I'm talking about here. Okay, you should all be able to see the screen. Now, this is gold, okay? And you can see here that we had what we call a successful test down here around 12.76. We call that no supply in the market. There was no selling pressure. Look at the volume as the market fell. There's no selling pressure in the market. Most importantly about gold today, they marked it down at the open, and we had what we call exactly the same thing that we saw on the yen, climactic action. That's buying by professional money down there, okay? And now we had the first successful test, no supply, and now we're testing again. Now that test right now, you'll see the color of the signal has turned light green. That's saying it's not successful yet. So we've got to wait for another one. And when another one comes, you're going to see in here that it's going to start flashing. You can see down here, look, here's gold. And you can see here, let me ask you all a question. Looking at the scanner here, would we be looking for longs or shorts at the moment in gold? What do you think? Would we be looking for longs or shorts in gold? What do you think? We've already had one set up here, confirmed. And it's gone up about $1. Bit slow at the moment. Exactly right. Exactly right. Yep, you've all got it. I mean, it's not difficult, is it? You're exactly spot on. Yeah, so everyone has typed in the same thing, which means at the moment you are understanding what this system will do for you. You're understanding it, you're seeing it live. Okay, so how is this all going to form into a trading plan that you can operate immediately? Because you don't have to learn all of this stuff. You don't need to know what every indicator is. You don't even need to read the dialog box if you really don't want to. The system is saying in a market that's going up, we look for testing, or we look for what we call stopping volume. In a market that's going down, and I'll show you a trade set up in a minute that I actually recorded when we were in the CME. I'll show you an actual trade that we took, and you'll see very clearly a principle which comes up time and time again in the markets. So the concept is simple. The trading strategy is built around the trade guided core trading process called scan, confirm, and trade. The concept, scan, as I've shown you, to show visually clear trend alignment in multiple time frames, to allow a trader to monitor and scan hundreds of charts at one time, so the system is sniffing out trading opportunities for the trader to then analyze on the charts, to show when the market is in congestion using the proprietary trading tools developed by our company, Trade Guider Systems International. When the scanner is misaligned in multiple time frames, no trade. When the scanner is aligned in multiple time frames, possible VSA trade setup. Confirm, to alert the trader when a major VSA principle has been found in any time frame being monitored by the system. Okay, to identify trading opportunities by looking at unusually high volume on a chart, followed by low volume. Okay, now that's exactly what we saw today in the Japanese yen trade that we took. And again, for those of you that just joined us, I took a trade right at the beginning based on this very setup, which was called no supply, and then a test in a rising market. And I will review that. Bar information on every single VSA price bar, which I'll show you in a second. Each VSA indicator has a number and a detailed description of market conditions that caused that indicator to appear. Stop management techniques for managing the trade through to the close. The time frames that this particular strategy monitors are the 30-minute, the 15-minute, the 9, the 7, the 5, and the 3-minute chart. Now, before you go any further, these are the platforms that we currently support. I'm currently using this platform. It's my preferred platform, Infinity AT charting platform, which is what I'm demonstrating today. If you've already got the software installed on your computer, fine. But again, we go to our website. I'll show you where you can get the software. Now, the trading process, this is what we recommend you do. Do not trade a live account until you've made 100 trades on the simulator, recording the results and taking screenshots of each trade with risk amount, profit target, and actual results achieved. That is vital. So if you haven't got the platform, you can get a simulator from Marcus or from any of the brokers there, in fact, at Infinity. You just give them a call afterwards and say, right, I want to download and do a demo trial. You don't even have to fund an account. You can get it for 30 days with live data and trade on the simulator. So you can actually prove to yourself that you're actually going to make it in the market. That's a very important thing to do. Then we have the trading steps. You look at the news. We go and say, right, is there a news-driven event coming? If there's a news-driven event coming, we do not want to be caught in a whipsawing market. So we say, don't trade into the news, trade after the news has happened. For instance, last week, we were very blessed at the CME because we traded on the Thursday, the day after the Fed announcement, the day after. We didn't trade at all on the day of the announcement. There was no trades there. So we traded the day after the announcement. And guess what happened? volatility, lots of volatility. Okay, so can everyone see my screen, by the way? Okay, I just want to make sure you can see my screen. Let's just there you go. Sorry, I was on a different screen there. So anyway, so let me just read this back to you again. Okay, so here is the trading process. All right, the time frames, just to repeat, as I've shown you on the chart there, 30, 59, 7, 5, 3. Okay, ensure, obviously, I'm demonstrating at the moment the Infinity 80 charting platform. Okay, trading process. Rule number 1, I said here, do not trade a live account until you've made 100 trades. All right, on the simulator. Piotr says, on what basis do different time frames of the indicator determines long short? It's basically based on the diamonds and the medium-term trending system. That's what that visual is showing you, Piotr. So it's proprietary. I can't explain to you how we do it, but it's looking at bullish versus bearish volume in the time frame that it's actually monitoring. And we've used the biggest time frame is the 30-minute chart. The smallest time frame is going to be the 3-minute chart. So do not trade a live account. Get a simulator. How do you get a simulator for futures? You do exactly what I do. You've got this platform here, which is Infinity Charts, okay? And you can see here in the Infinity Charting platform, this is gold, as we can see here. And at the moment, we're testing this high volume area, right? That's what we're currently testing. This is actually a 1-minute time frame, which I used for the hedge fund software. But for our strategy that I'm showing you today, which is called Sharpshooter, we're just going to be using the 3-minute chart. All right, every indicator comes with a description. So under here you can see where the buying came in again, climactic action. If you want to learn this system, you just read the dialog box. It tells you exactly what's going on. All right, it says the next bar should be up to confirm the indicator. The next bar closed higher. It had another indicator on it, a bottom reversal. That was a bottom reversal and the market's rallied. It's hit some supply, and now they're testing this level. So what I'd expect it to do is to try to break through the top of this bar, okay, at 1278.8, and then push higher. That's what's happening at the moment. So I'd be looking for a long trade into this area, right over here. Now, from the point of view of these other markets, all of these other markets you can see are doing the same. The pound at the moment had an indicator for a swing trade just here. Someone asked, can you swing trade this strategy? Yeah, because you can, but you're just going to pay more attention to the bigger time frames if you want to swing trade it. Okay, so you don't necessarily need to worry about the 3-minute, 5-minute chart. You're going to be paying a lot more attention to the bigger time frames, like the 9-minute and the 15-minute. Okay, all right, let's just see if there's any other questions before I move on. I think we're doing quite well for time at the moment. Yeah, good. Okay, so beware of the news, it says. Rule number 2, do not trade at or near major news events unless you want to do so. It's your choice, but we don't recommend it. The big volume happens at the events, whipsaws the markets and catches stops. Be clever and wait. You're paid to be patient. The trend often starts days after a big announcement, such as the Bank of England or Fed announcement, but not always. So watch the charts. The charts don't lie. Scan. Now we set up the scan. Okay, the scan is very easy to set up. Okay, we have what we call our base software scan. Okay, this is what the base software looks like. Okay, so this is not the smart technology. This is our basic software package. All right, now here I can actually scan, and I am scanning all of these different instruments, as we can see. All right, so if I click on this one, you can see the ZS. Okay, you can see also that if I want to bring up all the scans at once of all the markets, I just click on that. Now I can just go through and look at the time frames and see if I've got trend alignment. So let's all go through these together. So this is ZS. What do you think? Long, short, or no trade? So go with me on this. Long, short, or no trade? Long, short, or no trade? Correct. No trade. Agreed. Okay. Long, short, no trade at the moment. And that's exactly right. The yen has gone into congestion, as you can see here. So there's no trade. Correct. Ah, look at this one. This is a pretty obvious one. Long, short, no trade. British pound. I'm even going to go and look at that on the other screen here. So bear with me. Yeah, definitely. Good. That's definitely looking long. Okay. Here. Okay. High grade copper. I'd say potential for a long if this turns over, but no trade at the moment. That's potential for a long, definitely. You can see over here, stopping volume has come in on this chart. You've also got on the 60-minute chart a reversal that happened, I think, yesterday. So definitely that's potential for a long trade. Yep. Okay, long trade, no doubt about it. The Aussie dollar, okay, in congestion at the moment, no trade. Same with the New Zealand dollar, nothing there at the moment. Again here, nothing there at the moment. Now notice, on this particular strategy that I'm operating, this is our hedge fund strategy, I do use much bigger time frames. But you might find, while this won't give you a trade using those time frames, using the sharpshooter strategy that I'm sharing with you, you will see more trades because it's monitoring much smaller time frames. So you will get more trade setups. Okay. So again here, Swissy, no trade. No trade. You're getting the picture. It's very quick and easy to go through these. That's potential shorts on the Dow. Nothing there. And again, you get the picture. I'll close these down because obviously with the smart technology, which is our more advanced system, it's doing all of that monitoring in one place, as I'm going to show you. So now I switch to smart.
Trend alignment to the upside has arrived.
And we notice here, okay, that everything, and now the euro, look at this. Euro's really got good potential. So if I click on there, it's now, we'll go and have a look at the euro. And I think gold is going to try and push higher as well. That's the one that's we've already got 2 alerts on. So the euro here, we can see, if I go, I'll start with the 4-hour chart. You can see on the 4-hour chart, everything's bullish. These are the things you're going to look for. So if you're swing trading and you're looking at here at the euro, it's telling us pretty much every time frame is bullish. Okay, from here we're making higher highs on the bar, and over here we have no supply, and we also have no supply. What does no supply means? No selling pressure on the chart. All right, it means no selling pressure on the chart. What do these boxed signals mean? It means it's a major principle to be paid attention to. So it's a very strong indication of strength or weakness. All right, that's what that means, George. So it's just confirming it's a very strong sign of strength or weakness. 15-minute chart, again here you can see down here we've got a reversal, and then over here a test of this area, and then it's bullish. It's moving higher. Okay, let's just have a quick look. Okay, let's have a look over here. So really you can see on the euro that the weekly chart's been going up. The 8-hour, the 4-hour, the 60, the 15, the 5 have all been moving higher. So clearly in that situation, just like we're looking for in gold, we're looking for tests. Okay, let's finish this off. So now we know we've switched to the Smart Center and we're scanning. Okay, now in the strategy that I'm sharing with you now, the highest time frame is the 30-minute. The lowest time frame is the 3-minute chart. Now you'll see here, we're looking for trend alignment, as you can see in this example in the Dow. All right, trend alignment in this case was to the downside. So we'd be looking for short trades. And the same was here. We'd be looking to make sure the trend is in harmony with the trade that you're going to take. So if everything's red, you're going to be looking for short trades. If everything's green, you're going to be looking for long trades. If everything's grey and green and red, I call that the Christmas tree, you're going to say no trade at all. Ramesh, are the exits also determined only by the opposing arrows? No. One of the things you'll teach with the strategy is once you're in a trade, you can then move the stop to break even as quickly as you can, and you can let it run until you get stopped out. But I always, as I'll show you, if I get this fill in gold, if we can get in there, I can show you how we manage that through. All right. So Ramesh, let's see if I can show you that live. In fact, what I'll do, I've actually got, while we're waiting for this gold to trigger, I'm going to show you a recording of this trade that I took. It's a short trade, okay, using this system, and I'll talk you through it. I'll walk you through it. In addition, I've got a YouTube video that I can send you to, which is here, which actually showed the trade that was one of the trades that we took at the Chicago Mercantile Exchange on Thursday, which is a long trade. And again, if I post this in the room afterwards, you'll be able to see. Let's just pop that in here. That's the YouTube video. It's only 10 minutes long. It explains the long setup. It's very, very similar to the trade we took earlier in the Japanese yen. Quite similar indeed. Right. Okay. Rule 4. Very simple. If we see the market doing this, so the 30, the 15, the 5, the 7, the 5 and 3 minute charts are all in different colors, as we've all identified, no trade. Okay, John's just asked a very good question. John says, how long will the trade be valid for? It's a great question. If the setup comes in on a 3 minute chart, you're probably going to be in the trade for a very short period of time because it's only a very small time frame. The trades I like to look for are really when they start to be seen in the 9 minute, the 15 minute. The ideal setup is when you see a test in a 30 minute chart, because it's going to have a bigger move because it's a bigger time frame. So the rule is, John, when a setup happens, the smaller the time frame, the likelihood of a smaller move. Now, that doesn't always apply. I've had trades that have triggered on a 3 minute chart and I've been in them for 4 hours because the market just kept going. And in fact, at the CME group last week, we had a similar situation where we were in a trade that I thought I'd be in for a short period of time and I was in a lot longer. The rule I apply to my trading and to this strategy is once the market moves in your favor, get your stop to break even as quickly as you can. That's the golden rule. Get your stop to break even as quickly as you can. And then using the software, I'm using Infinity AT charts, you can then use a stop by moving the stop with the actual market as it goes in your favor. Hopefully we can show you that again today, but I've got a recording of a trade that I did where I can show that anyway. Number 4, step 3, confirm exactly what we've seen today. So for a short trade, you wait for the market to come up with an indicator that's a solid color. So not a light colored red, a dark colored red for shorting. Okay. Over here, you can see when you get a confirmation, look at the time frame, because the bigger the time frame, the bigger the move. There it says it, look. So John, that answered your question. The bigger the time frame, the volume spread analysis signals appeared in, the bigger the move is likely to be. Remember, for a signal to be confirmed, the next bar needs to close below the close of the bar for a short trade. All right, so for a long trade, it's the opposite. We're looking for greens. And here, for this example here, this was a test. But today, just to review that, the yen trade, if we go back and look at it, was actually a test in a rising market. Now, if we look at the yen at the moment, you're going to see, this is the 5 minute chart, okay? So here was the entry. Over here was confirmation. It's gone up. Now look, I exited my position on here, as you all saw, no demand. Now they're testing that same level. Okay, they're testing. But the market has gone into a very narrow range, and notice the color of the diamonds have gone gray. That's telling me not to trade yet, but to wait. Because what's happened is this volume here came in at the London fix, which was at 4 p.m. London time. And very, very often, in fact, it was actually here where the fix was. When that fix happens, you usually get the bigger move. And then the market, just like it's happening in gold at the moment, it pauses for breath before making its next big move. So the best time of day to trade, I would say, is always between, in Chicago time, it would be around 10 a.m. when we started this webinar, through to around midday. All right, that's when you start to see the decent moves coming in. So at the moment, it's very quiet. It's because they're testing some of the supply that is present there. So let me now just put up the video, and I'm going to talk you through a trade here, and I'm going to show you why this. Now, so I've shown a long trade today in the yen. That was a trade we took at the beginning. So you can go back and review that. Now I'm going to show you a trade which was to the short side. And as it happens in this instance, this is my entry, and I'd already move the stop to break even. So that was already where the stop was. Now, my preference is to move the stop down and then try to get into profit as quickly as I can. So let's play this to you and we'll talk through what's going on. Now, first and foremost, you're going to see that this is the trading dome, of course, as you know, and this was the entry. Now, this is called up thrust in a downtrend. It's called the up thrust in a downtrend, all right? Now, over here, you can see where I'm pointing at there, we had what we call supply. Notice the high volume, narrow spread. So that was selling coming into the market. Selling coming into the market, okay? I'd now moved my stop down through the break-even point, as you saw there, to profit. So that's the first part of the strategy. That's stress-free trading when that happens. All right, so now here I've got what we call no demand in the market. And if that is confirmed, which it currently wasn't when I was filming this, I would have added into the position and scaled in to the trade. So we've got the up thrust, as we can see. You can see the stop has moved from, so it's 18 ticks of profit, which has now been locked in on that particular trade. Okay, and below here, you can see why I protected the trade, because an opposing principle came in on very high volume. And I can tell you, actually, the market reversed back up to my entry point. So it was the reason to take some profit out the market. No one ever went bust taking profit out of a market. Now, there's the entry right there where I'm pointing at. You've got weakness in the background, then you've got the up thrust. An up thrust is a stop gunning maneuver used by professional money, okay, to basically catch stops of anyone that's short. And if you see it in a downtrend, it's one of the higher probability trades that we have. Okay, again, it's all about probability. There's no guarantees of anything. It's always about probabilities. That's what we're looking for. So I personally have favorite trade setups that are sent to my phone, and this happens to be one of them, which is why I videoed it, because it's a good example of where the weakness is. You can see here, I'm just going to draw a line here. This is where my trigger number was. You can see right here where I'm drawing that line, that if the market went above that area, I would then consider a long trade, because I can see the buying on these two down bars here. Now, if we come across and play it forward, you're going to see that it tries to go down. Then we have a shakeout. The market here has pushed higher on that bar. Okay, and I've moved the stop down a little bit further there. And so the reason I protected the trade now, having been short, I saw an opposing principle. And the opposing principle was strength coming into the market. Okay, and you can see the software here. There was the stop now. So you can see the stop there was at a profitable position. I then just looking at some of the weakness in the background, and there you can see it was finally filled right there. For the profit. So basically that was a short trade as the market was going down, and it's called the up thrust. And notice some of these bigger time frames were also trending down. So the rule here is really quite straightforward. The trend is your friend. Trade in harmony with the trend. Now, I'm going to give you a copy, all of you, of this document, okay, for you to go and look at afterwards, because it does form the basis of the trading plan. So I'm going to post it in the room now. Can you all just confirm that you can see that link, please? And then I'm going to take some questions, and I'm waiting for this gold market to push higher. Okay, everyone can see that. That's good. Okay, if you want to find out more about the software and about the special offers that we currently have for the software, contact Infinity directly now. After I finish, I'm going to be in their offices in an hour, and if anyone's interested in buying the software from us or trying our strategy, then contact Infinity and they can give you a special promotional discount. I will let them know what the code is for you to get a promotional discount, because we did do a promotion after the CME event. It's obviously the CME event, we did a very big promotion, but we're not going to repeat that one. But we will be offering a discount for anyone that's interested in trying out the strategy. So let me just see if there's any questions. Everyone's got the right. So basically, let's go back to that gold chart and we'll summarize, and then I'll take the questions before I hand back to Marcus. And I know some of you will want to know, how do you get in touch with Infinity? Marcus will cover that in a second. They're great guys, by the way. They're very experienced. They know what they're doing from a trading point of view. They can advise, they can help you because they're all registered. So if you've got questions and you need some help, make sure you give the guys at Infinity a call. So let's just take a quick look at where we're at on gold. All right. So I'm going to start by putting up the sharpshooter strategy. And we can see here that several things have triggered here. The British pound. Okay, so we'll just go to the chart. And you can see here, right here, that was the test that came in. That was about 30 minutes ago now, 40 minutes ago. All right, that's what you're looking for. It's green, the diamonds are green, or the dots are green, and you've got a confirmed indicator there. So that was the British pound. Also, the Canadian was doing the same thing. The yen, same thing here on this small time frame. Crude oil, same thing. Again here, you can see crude oil was all turned green.
Sign of strength has arrived.
All right, that's the euro. I knew that was going to happen. Right, let me go and have a quick look. Okay, so let's have a quick look. This is on the hedge fund software. Yeah. Okay. Let's just put I'm filled on gold. Let's just put the 6E up here. Okay, good. Perfect. Right, let's just wait. So basically, we've just had a principle appear here. All right, you can see the test, 30-minute chart, 15-minute chart, and the 9-minute chart. You can see the 9-minute chart here, 2 tests. These are the things you're going to look for. So, I'm sorry, I missed that trade because I was talking. So I missed that. It was alerted, and I missed it. Here was the 3 that happened before we came on air. Again, they were alerted to, so I'm not particularly concerned. A little bit worried now. It's struggling, just like gold is, to get above this area, this top. So I prefer to take a trade here, an increase in volume through this old area, and then a test. That would be a better trade to actually trade. Going back to gold here, it's trying, it's struggling. It's like an old man going up the hill here. But we do have the first successful test here. All right, and that was about an hour ago. And it's moved up about $2. Now it's testing this top, this 1278 area. Okay, but the spreads are narrowing. So I'm looking for a breakout here to around 1280, if that happens. Right, let me have a look at the questions. Let's have a look. Let's just have a look. Mooney says, I am old. Okay, I'm sorry to hear that, Jim. Crude oil. Yeah, we can have a quick look at crude. Nothing's happening on that at the moment. I have been filled. Let's just see where I got filled. And 1278.1. So we'll see what happens. I've got my stop below it. It's worth the trade because this would have been a better entry on there, but I was busy chatting. But clearly, we're still looking for a breakout trade here. Crude oil. Just let's finish with some analysis on crude oil. Well, first and foremost, we're going to look here and see if there's an alert. There has been. Okay, and you can see it's a 9-minute chart on crude, but it wasn't confirmed. See, the signal has turned light colored green, and there's a lot of volume. Now, I would want to see this area retested and then another rally. However, when you see climactic volume like this coming in, right, it has stopped the market. The signal's not incorrect, but I personally do not like to trade when you see failed tests. When you get a green indicator, by the way, it doesn't mean always go long. You've got to wait for it to confirm. And in this instance, this red indicator up here tells me they've marked it up on no demand. That's why it's falling. But you'll learn all this. Once you learn the strategy, Ramesh, you'd learn all this anyway. Okay, I think that's about it. Marcus, how do they get hold of you, Marcus, if they've got questions?
You can just call us directly. I'll put my contact information on this question box as well. If you guys have any questions at all pertaining to any part of this webinar presentation, the software or structure, how long Infinity's been around, I'm your man over here. If you're not working with me directly, I'll direct you towards someone else.
What's your dog's name?
Skylar. You can hear her in the background. I know. It's her lunchtime, Gavin. She's telling me.
Yeah, I'm going to say, I'll be in. We'll be leaving here in about probably 10, 15 minutes. So I'll see you around 130.
All right.
Good. So you got any questions at all? You know, I'm on vacation at the moment, but I will be going into the office. So I'm not actually working for the next few weeks. I'm on vacation with the family. So, if you've got questions, you can get hold of Marcus. And for the next few hours, if you want to talk to me, I'll be in the Infinity office. They can schedule a call with me if you're interested in finding out more. So I want to thank the CME. I want to thank Infinity. And God bless everyone. Take care and look forward to the next presentation that we do. Been a good day. Thanks very much. Bye-bye.
Thanks, Gavin. I very much appreciate you taking the time out of your day to come in and hosting this webinar presentation. As hopefully you guys know, we do these constantly. So if you like what you saw, you know, have any feedback whatsoever, we're constantly trying to self-improve. So we appreciate your not only attendance, but feedback regarding these presentations. What I will do here very quickly is I will change the screen, go over the risk disclosure document, and let you guys go have lunch, dinner, breakfast, and get going with your day. As Gavin did mention, and I mentioned at the beginning of this presentation, everyone has access to a demo account with Infinity. It's absolutely free. We don't require a credit card statement or anything like that. You can simply go to our website or contact me directly or call the main line here at Infinity, and we're happy to get that to you guys. So just give me a quick second. Let me change my screen over here. All right, and before we get going, guys, trading futures, options, and futures in retail off-exchange foreign currency transactions involves substantial risk of loss and is not suitable for all investors. You should carefully consider whether trading is suitable for you in light of your circumstances, knowledge, and financial resources. You may lose all or more of your initial investment. Opinions, market data, and recommendations are subject to change at any time. Past performance is not indicative of future results. So once again, I appreciate your participation. Please do give us a call if you haven't been in contact with us. We won't bite whatsoever. We're happy to answer any questions you guys have. Also, we have excellent tutorials if you just want to check out the software without, you know, actually downloading the program or speaking with anyone. We have an excellent tutorial page on our YouTube channel. All you got to do is go to youtube.com. In the search toolbox, type in Infinity Futures. You can check out the program without communicating with anyone. So thank you guys. Appreciate it. I'm going to go ahead and end this for everyone. And you guys have an excellent rest of the week and have a productive weekend. Thank you.